Guys, happy Monday. Topic I thought I would talk about today was related to insurance and the pandemic, and comes from an article that was on the below the fold front page of the Wall Street Journal today. And you've heard some of this in the news recently about certain auto insurers. Most of the large ones at this point have agreed to give back or credit or otherwise give discounts to their policyholders because they are not people aren't driving as much, so claims will be lower. Um, this particular topic pertains to um, basically calls for changes to insurance coverage to help certain industries or businesses that were acutely affected by the coronavirus. For example, restaurants. Um, Most or a lot of insurers have excluded pandemic insurance specifically out of their contracts because of the 2003 SARS epidemic. So they learned from that and they excluded this, but it doesn't prevent coverage from sort of happening retroactively. Now, there's a lot of political and legal and constitutional implications to all of this, but it's something that's happened before. In the 70s and 80s, you had um, jury awards that, someone would get injured in a car accident, for example. They would have so much coverage. And when it went to a jury, you have this injured person sitting there in front of you. They need help. And so you had juries that were awarding larger and larger shares or larger and larger payouts to claimants. And there's a term for this called social and judicial inflation, where coverage, the insurer bases its premium on uh, one set of data, and then by the time it comes to pay out, something has changed. So this happens to a small degree in almost all insurance. What constitutes coverage? There's questions on what do certain clauses mean and so forth. What's happening now is essentially a call for a more large scale retroactive coverage by insurance companies to essentially pay for some of the losses that these businesses are incurring because of the pandemic. And there's a whole political tussle over, what's declared, what causes what does this language mean. So you'll see these fights. There's some talk about insurers paying essentially rebating or otherwise paying these businesses, and kind of like the small business program where banks essentially act as the funnel to get the funds to the businesses. In this case, the insurers would do that. We just thought it was an interesting thing uh, to talk about and think about. At first glance, when all of this happened and everybody was staying in, uh, I had actually forgot about the concept, and I was under the impression, and it still may be the case, but to a lesser degree, that auto insurers, especially Geico, Berkshire Hathaway's Geico Insurance, would report banner profits because people weren't driving, and therefore losses would be down. Now, how much of an effect will that have versus the premiums that they've given back? So far, it looks like I think Geico has given back 2.5 billion, which would be somewhat maybe maybe about a month's worth of premiums. Um, will that get extended? Will there be pressure for others to do the same or more? We don't know, but it's something that we'll watch pretty closely and that will take time to play out for sure. So hope everybody has a great week. Stay rational, and hope to see you soon. Thanks for watching.